Good morning, everybody. Give me a moment. Gonna share that we are live, and then I will be right with you guys. All right. Good morning, everybody. So let's get into it here today. You can see the futures here kind of in the middle of, or right towards the top of a rising wedge pattern. Looking to squeeze. Got to see if it's going to fall out of this wedge or continue up. You can see some resistance at that 2806 area, forming sort of a doji over here. So got to keep an eye on that. You will see over here, here's our watches from last night, a little bit light. There was some indecision last night. Somebody was saying, why didn't we put EMPH on it? Again, very simply, guys. Our scanners at night scan for stocks that held their highs on the day or held their lows if we're bearish. Obviously, EMPH did not hold any of its highs. It was a terrible looking pattern. And then after market, it propped up. So now it's one to peripherally keep an eye on right over here. It's on trade ideas. So we'll keep that over to the side and keep an eye on it. Again, the pattern's not looking so hot right now. It's got kind of like a head and shoulders pattern. So we'll see if it has some movement up. So let's take a look at which ones we are keeping an eye on. You'll see that OHRP has a gap on the daily between 49 cents all the way up to 196. You can see some resistance at that 200 SMA. So see if this thing gets a pop and can get above that 34-cent area. Not looking so hot right now, a little bit messy. So let's see. All right, let's look at NIHD. That one we are looking for it to break above 295. Not doing so hot right now either. Again, watch this a little bit messy. Market's in indecision mode, and that's why we have trade ideas for days like today and in general to pick up what stocks are moving. So NIHD not looking so hot as well. Let's take a look at BLNK. That one popped up a little bit this morning, and then it's kind of down here. It's a kind of a crappy looking stock, but you can see a cup and handle-ish pattern right here. So you want to see this thing move up, see if it can get above. Now you can see pre-market high of 650. So where is that? Right around here. If it can get above 650, you know, you want to see it break out of that handle just above that $7-ish area. So but you can see this cup, handle, watch if it can break out of that handle area. So BLNK is one we will watch and see if it can get some movement up and break ideally out of that handle. But I like the pattern, right? But these handles get a little bit messy and choppy, right? This thing can trade around for a while, but it's definitely got a history of pumping and then dumping. CDMO, that was one right over here that's kind of in the middle of a triangle right here. Want to see if it can go and break out of that triangle with resistance around $4. Not really loving it right now. So we'll put that one on the side as well. CDMO, and then GLUU is another one, kind of a cup, and again kind of near a handle right now, not doing much of anything right now. See if you can go and break out ideally above that 607-ish area. So again, not doing much of anything right now. Watch, this is very weak looking right now. So let's go and take a look at some on trade ideas. Again, ENPH. So this one has a big cup handle right over here as well. We can draw this handle going down kind of like that right here. Let's do this. So you have the big cup handle pullback right there. You have $7.10 area as some yearly resistance. So see if it can go and break out and get above 650 with some resistance at 710. So we'll keep this one on the watch as well. And you can see right there, kind of draw your trend line, ascending triangle, kind of popped out, came back down. But this is one to definitely keep an eye on. And what you're going to see, I'm going to start showing you guys. Again, I've been slowing things down for you guys. By showing you guys, especially if you're new, you can slow day trading down by using a 5-minute chart. Let the 5-minute, again, if you want to be textbook and really be a proper day trader, you want to look out for a breakout on the daily or a continuation, right, with room to run. So either a breakout or a gap to potentially fill or a potential reversal, right? So look at a good daily chart. Then you want to see if the 5-minute setup is good. If you have a good daily chart and a good 5-minute setup, then you move to a 1-minute for entry. But just blindly kind of going when a stock just breaks pre-market, like if ENPH, the second it breaks above 645 when the market opens, that doesn't mean you should take that trade if the pattern's not looking so good. Because many times it might just go up really quickly and 5 seconds later completely dump. So you have to make sure the setup and the patterns are good. So I'm going to show you guys you know, these the pattern. So we're going to start doing now more of a combination of our watch list and ones that are coming across trade ideas or the high of day movers. So that way you'll be able to just, again, I'm just going to show you patterns until it gets drilled into your heads. So ENPH, definitely one to keep an eye on. See if it'll have some movement up. We like that kind of that ascending triangle that's being formed. And you can see now above between that 626 to 645 has to break above that 645 area. Let's take a look at CANF. So CANF, let's clear the drawings. All right, so this one's getting popped up to this 162 area right over here. So high of the pre-market's 162. And if we go down here and look at the 5-minute chart, you know, it's kind of bull flagging, but it's starting to fail right here. So you want to see this thing hold. You can kind of draw your flag-ish. You know, sometimes it's not going to be a perfect, it's like a, you know, kind of a flag, right? You can kind of see right here where price is. You want to see it ideally if you're going to be bullish on it. Get above, break out above that 155, and then see that 162 area. So this is one we could peripherally keep on watch, CANF. It's not looking so hot at the moment unless it can kind of hold this lower trend line and get back above. Let's take a look at, let's see, VTGN. VTGN, kind of another one here, popped up. You can see pre-market high, 172. Do your drawings right over here. Kind of another similar, you know, sometimes you can't get these perfect. Kind of like that, and maybe right around here. So kind of a flag or a falling wedge. Needs to go and break out. So again, resistance right around that 172 has to break out for continuation. So what we're going to do is just have these. What you're going to see is this is what I do, guys. I have two screens. Let me show you this. I have two screens that are like this. So I have five screens total, but I have two that are like this. So I'm taking a combination of trade ideas ones and our watch list, putting them on 5-minute charts. And here's what I'm trying to find, these patterns like this for you guys, right? And then when I see a good 5-minute setup, you'll see I have them all on the 5-minute setup. Then we're going to look at 1-minute entries. Again, many times if you trade that way, again, in our community, there's people that that don't like the pattern strategy, right? They want to get in, get out, and not trade the best setups. Now, you can make a lot of money trading those breakouts, but you have to still trade them properly. Like Dan, he loves to trade breakouts, but he has a really good ride the 9 strategy, and getting in on these low float movers when they're getting pullbacks right to that 9 EMA or as close to that 9 EMA as possible. So finding those, you know, pullbacks, getting close to the 9, holding above the 9, getting a good entry, an early entry, and riding the 9, right? So you can do it absolutely that way, and it works. But you want to be very aware. If you're trading on a 1-minute chart, you don't want to buy like way out in here, right? You want to buy, I'm not saying to buy these ones, but buy closer into the 9 EMA, not way out here. So again, ideally, you want to have a good daily setup, a nice 5-minute intraday setup, and then look for your entries on a 1-minute, and then determine whether you're going to get out on a 1-minute chart or using a 5-minute chart with a pattern, right? So that's going to be up to you and how you determine what you're going to do as a trader. But there's several different ways to trade. So how I'm going to be focusing and showing you guys is just taking combination of our watch list and trade ideas and showing you guys the patterns, right? And showing you guys proper risk management levels. On a day like today, again, you gotta have to be careful because there's indecision in the market at the top of a rising wedge. So it's either going to continue up more and squeeze more, or it's going to start to fall potentially out of that rising wedge, which then creates indecision. So let's give it a moment here and we'll wait for the market to open. Again, if you're not a member yet of our community, you're just watching us on YouTube, you will see here, you can subscribe. We turn the chat off on our YouTube because all of our chatting is done in one of our 3 trade rooms over here. We have a day trade room, swing trade room, futures room. We have courses, alerts, everything. We are only $10 per month. All right, so come and join us and you can talk to a bunch of people in our rooms who are all looking at a combination of what I'm looking at and a combination of trade ideas and seeing what's moving, right? So now we wait. I put a split screen up for you guys, so we're going to just look at these patterns, right? So you can see a couple here. You want to see it go. And if you're watching these, you know, on this kind of this pullback down here, this flag pattern, you want to see price get out of this area, get a nice 5-minute close outside of, you know, these upper trend lines areas, kind of like this this flag or slash falling wedge pattern. Again, remember, many people are watching these. So we're going to, again, look at a combination of trade ideas as well as our watch list. I personally, as a trader, I like to let, you know, the first 5 or 10 minutes go. I like to see if a stock's going bullish. I like to let it form that green candlestick up and then maybe form a candlestick back to show a nice little bull flag. I like to trade bull flags in ascending triangles. I am not an opening range, breakout, get in, get out super quickly. I like to use the patterns, right? Let the patterns form. So let's go look at glue right now. Glue, you can see the alert went off on glue at or above 587. So now what we're going to do, I'll move CANF over here. See, it's bouncing around right now. We'll take a look at glue. So the alert went off on glue, right? So it broke above 587. It's at $6 right here. You want to see it now get above $6. So me at this point, I want to let this 6-minute or this 5-minute candlestick close. Watch if price is going to go a break above that candle. But many times I like to see it pull back, have a nice little bull flag after it pulls back. You can still see it's, you know, $5.89 up to $6. Not too bad, about 11-cent risk management. But you want to be careful getting in on these big green candlesticks. You like to ideally wait for a pullback to get in. Let's see here on the daily for glue. So again, glue is getting near the top of big cup and handle, right? So $6, it has some room to run if it can get above $6, and then the 607 area, the top of that weekly high wave candle. So we want to see it continue above that. So at this point, I would zoom down to the 5-minute and let this 5-minute candle form. See if it's going to go and reject that 607 or if it'll get above it. So I let it wait, right? Let these candles form, right? You can see that high wave-ish candle forming. Lots of choppiness right now. That becomes, when you look at a 1-minute chart, you know, very, very messy, right? This is a very difficult one to trade because if you look at it, the 1-minute chart on CANF is very messy, as well as the 5-minute chart, very messy, a major high wave candle. So this is much more erratic of a pattern right now than glue. So for me personally, I would let this thing move. I wouldn't discount it or ignore it. I would let this pattern play out. Let the bulls and the bears fight it out. Let them take the first 10, 15 minutes of the market. Let them battle it out back and forth and let the pattern form. So everybody over here is distracted by CANF, right? You can see 2.5 million of volume. Glue, not many people are paying attention, slowly grinding. It's a higher float stock. It's going to move differently than CANF. You can make money on both of these stocks. It's just you have to be much quicker on a stock like CANF, where you can, with glue, might be slower. Again, not going to go super erratic, but you know, you got to see right over here, let these patterns form. Let me take a look over and see if there's any other ones that I like. I'm going to pull up over here CD. Let's actually put glue over here now. I'm not liking CANF right now. I'm going to let that one play out and come back to it. We'll pull up actually GLUU. GLUU, we're going to let this one kind of play out, let the pattern form over here. Being aware of 607 resistance. And kind of basically, obviously you want to see $6 hold. but right around that 593.94, you want to see it hold. We'll pull up CDMO over here. So CDMO, let's see with this one, kind of in this triangle. Want to see if it can break out right around this, right around that 380-ish area. See if it can continue, get up above that 380-ish area with, about $4 or so as resistance. I don't really like this pattern right now, but if you were to trade this, again, be aware it's over extended. Want to see it get above 380. You can use a candlestick close below this as your stop. I'm not a really big fan of that pattern right now. NIHD may be moving up. So right here, GLUU, at this point it goes, now it's pulling back. So it goes up and pulls back. This is what I'm looking for on a 5-minute. I want to see this hold and form a bull flag. I don't want to see it go up, come back down, and crash. I want to see a nice bull flag hold on a 5-minute, then use a smaller candlestick. If this holds as a potential bull flag, a break above that flag, a smaller, using a smaller candlestick like this as my risk management. I want to pull up, actually, CDMO not getting any volume right now, so I don't like that. I want to look over at NIHD. So NIHD, you can see the alert went off at or above 392 or 292. It's above $3 now, which is good. That psychological resistance area. Now we want to look at the daily chart again. Again, we don't panic. If something's moving, that's okay. You may miss the move. If you do, there's always another trade. Want to see it get above that 305, this candle over here. You can see some resistance around 335. So at this point, now, bigger candle right now. It's going up. It's rejecting right around that 305 area. Now I want to watch a pattern form and hold. This one right here, it's a little bit too risky risk management, 292 to 310 as it's moving. I want to watch for a nice little pullback before I get in. Right here with glue, maybe holding this breakout area of the 494 just below VWAP. So we might just watch and see, is this going to be a good candle? Is this going to hold like a nice hammer above the breakout area? If so, this might be one to trade, a potential kind of 5-minute, like a bull flag using, this candle 597 down to 594 as my risk. See, candles like this 3 and 4 cent up to 5 cents or so, these smaller candles are where you want to risk, not the big ones, right? So many times, again, a stock won't go. The high of day is 601 at this point. So you can see these are both moving. Sometimes you'll miss it, right? If you don't do a 1-minute entry right away, sometimes the move will just go right up and you'll miss the move. That's okay. You can, again, go to a 1-minute right away and trade it. And that right here, I missed it doing my strategy, right? This is perfect right over here, but I was waiting for the 5-minute, right? So I would have missed my entry over here. At this point, you're not going to want to chase. You want to watch for a pullback. So this goes to show you this is your perfect bull flag to have traded, but I just had my 5-minute up, right? So this is where you got to decide, okay, do I want to trade the 1-minute right away, or do I want to let this 5-minute candlestick move? It's a matter of your preference. So at this point, I want to watch and see these candles close and see what they do and see if I get a pattern. Glue at this point, now I might zoom in a little bit on a 1-minute because you can see 601 down to 593. It's kind of a tight range here, not huge candlesticks. This is one now I would start to zoom in and see, okay, let's go look at the 1-minute and see what's happening. Now it's, again, you have this kind of this triangle pattern right here. Now you can draw your trend lines, and now you have a potential ascending triangle. So at this point, you might look in this area and say, okay, I might be willing to potentially look at this. But as you can see, it's going up and pulling back down right now. 9 EMA is trading sideways, right? So price is right at this lower trend line, might be looking to fail. It's, again, difficult. These ascending triangles, you have to be able to willing to ride those out. That's why you would look at, again, the 5-minute, what's happening. So right now you have that 5-minute, this kind of doji candle. It gets a little bit more risky and a little bit challenging. So at this point, I personally would say, I'm going to kind of let this one ride a little bit. I would bounce between the 1 and the 5. Say the 1 minute's not looking so hot right now. It's failing this trend line. I would give it, I personally would let this 5-minute pattern play out, see if it holds, and then forms kind of like right here, this flag, right? See if this can hold and hold like a flag on a 5-minute. And if so, then I can, have some better, I have a better pattern to play rather than having to get in on this 1 minute that's getting really messy, right? So over here on NIHD, so now it's kind of broke out. Now you have 317 as high of day. Now you want to see if this 306 area is going to hold. Maybe get a smaller pullback and use a candle like this if it's smaller as your risk management rather than the bigger one. Right now you can see glue is starting to fail. This one's still on the 1 minute NIHD, a bit overextended. Your best entry on the 1 minute was back right over in here. Right now it's a bit overextended, so that's why I like to slow it down, look at the 5-minute pattern. And it's got to contend with this wick. Right now, at this point, you kind of have tweezer tops. You want to see it break above 317 to continue. So you see it goes back up to high a day of around 317. It's pulling back, so it's in this range between 306 and 317. And glue, let me go to a 5-minute, not the 1 minute. And glue is failing, right? So at this point, you can start to zoom in and say NIHD might be looking good. A little bit overextended. Again, if you take a risk or if you risk on this, be aware it's a bit overextended, but it might be forming an ascending triangle here. If it breaks above 317, you want to see it hold, and use that 9 EMA as your guide. If you risked, remember it's a bit overextended. If you get a close below the 9, that would be your stop, so you're about a 10-cent area. So you'd be risking maybe 10 cents for the potential to make, 20 or so. And now it's breaking above. So this one is moving. NIHD is gaining some volume. Now next up is the 335-ish area. And see how quickly that happens, guys? It goes up, 317 to 325, pulls back right away. So then many times it'll break out and retest. You want to see it hold, right? Just be aware on the 1 minute, very overextended. Now you see that kind of that shooting star. Now this might be a warning that, hey, watch out for a potential reversal. New high of day is 325. Let's look at the 5-minute. 5-minute moving up. Again, bigger green candles. This is where you determine, hey, am I going to trade the 1 minute on these 5-minute candles? Or am I going to let these green candles go all the way up and then wait for a 5-minute pullback before you trade it? That's really up to you, right? You could let this play out, go up, watch if there's a pullback, then trade it, or zoom in on a 1 minute and say, okay, it's kind of moving up. I'll trade these really quickly with my hotkeys. Again, it's all a matter of your preference. So this is what I would be looking at potentially right over here on the 5 minute. So now as this goes up and it pulls back, is this going to completely dump, or is it going to form more of a smaller pullback candle here on a 5 minute and get a nicer bull flag? You know, that's more my style. Let the move right up, let it pull back, see if there's a smaller candlestick on a pullback, and then go and trade it. That's more my style. 5 minute pattern, pull back, go. I like to see right over here. You can see right here, maybe forming a bull flag here. At this point right here, it's kind of trading within this flag. I want to see a nice green candlestick close right over in here. And then if so, then I might take a look and say, hey, I might be willing to risk this candle for a break of this flag for an anticipation of a break of $6, using maybe a candlestick close below here as my stop. This is what I'm liking to see, right? I like to see this pull back so it goes up, gets overextended. I like to see it pull back on a 5 minute, get a nice setup in an anticipation of a potential break of resistance. And I like to use these smaller candlesticks. If one forms here and doesn't fail, I like to use those as my stop. Sometimes you won't be able to get it, right? That's where you got to determine this might not form and it might just go and break out and you miss it. That's where you got to determine, are you going to get in and kind of look right over here? It's a bit messy on the 1 minute chart. This is cleaner. This is messier, right? And let me take a look at ENPH might be trying to make a move. Let's move NIHD over here. So ENPH may be trying to reverse here. Keep an eye on it and see if it can go and break above that 611-ish area. And then remember, there's some resistance between that 627 and that 645. Might be trying to reverse. And now glue. I'm going to go back to glue now, because glue, now it's getting near that 601 area. So now, this is one I'd like to zoom in on. You can see this 5 minute candle here wasn't looking so hot. It looked showing some bearishness, but it broke above. Now you're getting at that 601 area. And now you might want to change these patterns up or change your lines. And now you can have more of a possible ascending triangle forming, right? You guys see that? So now on the 5 minute, it might be forming an ascending triangle. So you have the pattern forming. You can say, okay, clear resistance is that 601-ish area. You want to see it break out above that. Let's take a look at the 1 minute chart. 1 minute chart, again, an ascending triangle. So now this is where we say, okay, we don't know what the stock's going to do, but then you can trade in probabilities. You can say, okay, you know, the probabilities of an ascending triangle breaking out are pretty good, right? The probabilities are on your side. Now you got to say, what are you willing to risk to take a trade on this? You know, this 601, very important area to break. So then you'd have to say, well, if this trade goes against you, where are you willing to stop out? You'd probably look somewhere right down in the middle of this area, right over in here, some 592. So you might be willing to risk 8 cents, right? 8 cents or so if it goes, the trade goes against you for the potential. You know, again, we don't know how high this thing can go. you could risk ahead of time, because this is kind of a no man's land, right? You can see, I mean, it's got some room to run, but you don't know how high it's going to go. So ahead of time, you could say, okay, I'm willing to take this risk. It's got some room to run, but this could pop up 2 cents and then crash, right? So this is where, do you get in the anticipation of the break of an ascending triangle, or do you let it go and break out of the top of the ascending triangle, watch for a retest before you get in and go up? That's where you have to determine on these ascending triangles what you're what you're willing to risk. Are you wanting to get in the middle of this, up and down, or do you wait for it to break out above that 601, watch for a retest, see if there's a bull flag or so before it continues up? Many times it'll just break out and you miss the retest. That's, again, a matter of your risk tolerance. Right over here, now we're looking at NIHD. Here we go, and here we go. This is what I like to see. Kind of see if this is going to kind of bull flag, pull back down. You can see 326 down to 314. A little bit more, a little bit higher of a candle risk than I like. So at this point, I'd like to see, a candlestick or so close in between here. That may be a smaller one. But at this point, you want to see it go, break out of this flag and get above that 326-ish area. All right, you guys see these patterns? Flag pull up, pulling back. We're 20 minutes now into the market, and now the patterns are starting to form. You guys see there's 2 patterns here. An ascending triangle. Is somebody having problems seeing something on join.me? I don't know what's going on. I'm not sure why somebody's messaging over there. So, okay, going back here. This is where the patterns start to form, and this is where you start putting the probabilities and having proper risk management, right? So you're looking right here, glue and NIHD were on my watch list, right? Glue, NIHD, there are some patterns. An ascending triangle forming for a potential breakout, and now a possible, we don't know yet, bull flag forming, So now you're getting these patterns on a 5-minute. These same patterns, guys, when you're going to trade these, form on 1-minute charts. I'm showing you the 5-minute setups, and if those setups form, then we show and we go down to a 1-minute, right? So now you can see here, this may be worth taking, right? It's going to bounce around. It's near the top, right, of this ascending triangle. You have, you have the ability to have tight risk management, 601, down to even down here is 596, or even down here, 591, if you were to risk this. So again, this could then either be an ascending triangle breakout, or it can end up being kind of a double top, right? So at this point, you just have to have risk management. What are you willing to risk for a potential breakout of glue above 601? Are you going to risk, right down here, 591? Will you risk 10 cents? Are you going to risk the 9 EMA, VWAP? It's really, again, that's up to you. But you have to go in and say, okay, what am I willing to risk? And watch it bounce around. So if you're getting in anticipation of a break here, you have to define your risk ahead of time. Or you can say, hey, I'm not going to get in ahead of time. I'm going to decide to let it break above the neckline and then wait for a retest to confirm, and then I'll decide to get in. So again, let it break out. You could let it break out above 601, come back and retest that 601 area to say, okay, it's going to continue and potentially move forward using a close below 601 as your stop. So your risk, your stop would be a lot tighter, right? You would just use the top of this line, a close below that as your stop. So your risk would be tighter. So, would you get in anticipation of a break using maybe this candle down here? Or do you wait for a break above it, wait for the retest, and go up? That's, again, only a decision that you can make. But we always suggest having proper risk management and defining your risk. This 601, key level. Right here, NIHD, right here. So now this is one you might look at and say, okay, I'm going to zoom in. I'm going to look at this now. Right here, it's in a flag. We don't know if it's going to break above that 320, but now I'm going to identify this candle right here, that 318 candle down to 314. Now you have a 4-cent candle that you can look around and say, I might be willing to risk on this because now I'll use this green candle as my guide rather than one of these up here. And if the trade goes against you, you can say, I'll use a close below this 314 as my stop. Again, price is overextended right now. It could go against you, but at least now you could go and now zoom in a little bit further, right? I'm looking at this green candle. Now I'm going to zoom in and say, okay, I want to see it break above that 320-ish area right about, what the heck? I don't know why this should be allowing people. Dan, I'm not sure why this keeps popping up on join.me. Now we zoom in to the 1 minute and see what's going on. All right, so here you go, right? The 1 minute is a bit messy right now, right? So the 1 minute's trickier because this 5 minute candle is, it's right in the middle of this flag, right? So this is where you then got to zoom in and say, okay, I look into it further right over here and this green candle, but when I zoom into the 1 minute, look at price is trading sideways and it's bouncing around on this 9. So at this point, you want to see it get above that 320-ish area. And now it's kind of in this range. So again, it's trading sideways. I personally really don't like it. You have to unlock the meeting, Lucian. How the heck do I unlock it? It should already be unlocked. There we go. It is unlocked, Dan. All right, that's annoying. So you guys seeing this? Just trying to show you the different ways here, right? So at this point, it's still in a flag. It's not looking so great. This candle has not closed below this one yet, so it's still in play with the pattern. You can see with glue, it did break out above 601. It's at 602, and look, zoom in, it's retesting. Is that going to hold? We have to watch and see. If it holds, that's something on a 1 minute you might say, I might be willing to take this trade. If it holds at 601, it bull flags here and then breaks out. If it goes against you and you took a trade, you could use that 601 or right here, this 9 EMA in the 1 minute as a stop. You can move your stop up, right? Tight risk management. So watch if this bull flags on the 1 minute or if it's going to fail. But now you would, if you want to have tighter risk management, you would move up your stop from down here around 591 to right up around this $6, this 9 EMA, more as your guide, right? I see CDMO might be trying to make a move. We'll come back to NIHD. CDMO. So this one right here, it's broaching high of day around 379. Now, again, the volume is terrible on this right now. Only 31,000. Look right over here at GLUU. Might be flagging for a breakout. At this point, you don't know if it's going to break out or not, but you have tight risk management. You could use that 9 EMA as a stop if it goes against you, and a break above 602 if it's going to continue. Super tight risk management. Patterns forming, ascending triangle, flat top. Again, we don't know if it's going to break out. That's why you have tight risk management. Are you willing to take the risk on a trade like this? Let's look at the 5 minute. Again, an ascending triangle. These get messy in ascending triangles, these smaller candles. That's why you got to determine your risk. Where are you willing to stop out? Typically, people look more right around the middle of this area of an ascending triangle as your stop. Go to a 1 minute right here. So you can decide, I'm willing to risk that far down, or you can make it tighter. That's up to you. But be aware that, look at the trend line, price could easily fall right back down to this 598 area before going back up, right? These ascending triangles do that. So if you look at the 5 minute, it's a bit overextended. It could easily bounce back down and go back up. So that's where, again, proper risk management, looking what, determining what your risk level is. That's what's most important. So at this point, it's struggling at that 1 minute right here. It's trying to choose a direction. And NIHD, I'll pull that back. Let's put GLUU. GL. So basically with CDMO, I don't like this right now because it's not getting volume. It's broaching high a day, but it's not getting volume. So I might look and say I'd let that thing break out. NIHD. Pattern's breaking down now, right? So now you see a candlestick close below here. It's breaking down out of that flag. Again, when we had zoomed into that 1 minute over here, it was messy. It wasn't doing much. Again, remember when all of this is happening, let's put GLUU. GLUU is potentially failing right now. So now we got to see, okay, it's pulling back. Like I said, it possibly could. It can go right down to this trend line. If it starts to break that trend line, that might not be a good thing. It might be showing a sign of weakness, but these ascending triangles do this. They bounce around. That's why you could technically use down in here, this area, as your stop. Or you can say, hey, I'm not willing to whisk it right now. It didn't go and break out above that 602. Now it's failing the 9 and possibly the 20. And there you go. And now it's dumping. So now, at this point, I would go to the 5, see what's going on. And right now, it's not looking so hot. It's bouncing off the 9 EMA on the 5 minute. So now we got to see, is it going to go back up and continue? It could go either way, right? You see this line down here, that dotted line? A close below that, would be more of your stop right down in this area. If you kept the original, if you're just trading it based upon an ascending triangle. If you wanted to try, like right here, it broke above 601. If you didn't take that, that retest didn't hold. And again, these ascending triangles bounce around a bit. But remember, look what's going on with the market, the futures, /ES. Let's take a look at the futures. So the reason why many of these are bouncing around, look, this is like a perfect, like you can't even see it. It's a doji. It's a doji happening right at resistance. These dojis cause indecision. Uncle Ben's is saying, why is it that my 5-minute chart looks nothing like Lucian's in order to see patterns? No clue. Not sure if you don't have, if you have Think or Swim, you could always, again, watch this bounce over here on glue. You could always go to members only videos right over in here, and you could always upload either my setup over here or Dan's right over here for Think or Swim. Chris says, thanks for the YouTube video, Lucian. Really helped me understand some things, and I actually ended up with a nice profit today. Awesome to hear. Love it. So, guys, again, so watch this for a second. So, look. So, here's the pattern. Here's the 5-minute pattern. It's still intact, right? The pattern is still intact. It hasn't failed yet. It's not looking great. You have tweezer tops on a 5-minute, so it's not a great looking pattern. But technically, you still don't have a close below here yet. So if you risk kind of an ascending triangle, you could still technically be in this if you wanted to be. But just be aware, these ascending triangles, they get shaky and they mess out. That's why or they could really shake you out and mess you up a little bit. So that's why my second, I like ascending triangles, but I like bull flags more because I like a move up, ideally a pull back down here, and then a breakout. These ascending triangles they get a little bit choppier and messier. They go up and down. That's why you have to be able to draw your trend lines. So right now it's showing some, again, you might have to readjust this trend line and zoom in to maybe a 1 minute at this point and say, okay, can I adjust the trend line? Maybe more like kind of like this. I mean, it gets a little trickier, right? Like in here, you can move this one maybe right here. So you might have to adjust them a little bit. They're not going to be perfect all the time. So there's this one, and then we're going to go back over to CDMO, which again, this one is not building the volume that we'd like to see it. It's right at this triangle. If you go to a 5 minute, this one's potentially building an ascending triangle as well, right? So if you do this right over in here, you can see kind of another ascending triangle forming, right? Not doing much of it, not getting the volume, but my whole point being is you want to see this. If you were to take a trade on this, you want to see it break that 380 level, get some volume, right? You want to see the volume come in, stay above 380 and hold. You guys see these patterns? I'm going to come back. I'm going to take my quick water cooler break, right? I'm at work. I'm going to go to my water cooler, which is called my sink. And my sink is my water cooler. I'm going to refill, hydrate, and we'll come back. Right, so again, show you guys these patterns. You'll see here an ascending triangle right over in here. Here's your 1 minute. Here's a 5 minute. If we zoom into the one right here, it's not looking so hot, not much volume, but again, just look at these patterns. Watch how they play out. The most important thing on an ascending triangle is it has to break these tops and hold. Right here on glue, it broke the top, but it couldn't hold. And right over here on CDMO, you might have to now draw a newer trend line right over in here, right? Now kind of extend these bottoms and see. These are those patterns, right? With glue, it's got some volume now. With CDMO, it does not. So that's the risk. Do you take a risk on one like this and say, I'll get in before, in anticipation of a break, assuming some volume is going to come in? Or do you say, I'm going to wait for a break? That's kind of a matter of your personal preference. But you can still see down over here, this, let's do this real quick before I take my break. 5 minute, kind of the same thing. You can kind of go right back over in here. Even this previous level right over here, this top over here, you could use that as a potential stop level. And as you can see, it's kind of right in the middle of this ascending triangle, just like over in here, same kind of thing, right? So on these ascending triangles, you got to define your risk. If you get in anticipation of a break, you use that middle of that ascending part as your stop, or you can adjust it along the way. But as you can see, they shake you up and down and go all around, right? Shake you up and down. At this point, again, look at a 5 minute, slow it down, and you can see what is price doing, going up and down and trading sideways. So I'm just trying to show you guys these patterns and how you would define your risk. Again, nobody knows what a stock is going to do, so you trade improbables, and that's where you have tight risk management so that if a trade does go against you, you can cut your losses. And you can see on our watch list, again, not saying to trade any of these, but if you did, look at this trade right here. 380s high of day, you could have a stop right around 372, 373. That's a 7 or 8 cent risk management. Right over here, $6 down to $5.94. You have a 6 to 7 cent risk management. These are the things we're trying to teach you guys. You don't just trade something to trade it. You have to look at the pattern, look at support and resistance, define your stop, look where you're willing to risk, how much are you willing to risk, and as you can see, anything under 10 cents is a good stop. It's a good way to manage your risk. So if you're able to risk 10 cents, let's say, you want to have the ability to potentially make, 20. So right here, I don't know if CDMA is going to break out and get volume. We don't know that. But you might say, okay, 379 down to 373. That's 6 cent risk management for the potential to make, if it breaks above 380, it could potentially go up to $4. So you're risking 6 cents for the potential to make 20. That's, decent risk management. At this point, the volume concerns me, but that's how you define risk, right? I'm willing to risk 6 cents to make the potential to make 20. With glue has a lot more room to run, right? We're looking at let's look at the weekly. It's got some room to run. It's pumped before. It's at its highs on the yearly. Where is this stupid chart? I can't really zoom out. It's really at its... Oh, this chart stinks. Let's go over in here. You got this peak, this area of 6 cents. It could crash. It could dump right at that 606. So this is a little bit tougher to see. Well, how far can this thing really run? Do you get in anticipation of a break? Are you going to get in now more, or do you want to see a break above that 606 area? So this one's a little bit more of a, can go to more no man's land. It's got volume, so it might have room to move more. So you might not know. You're not going to be able to necessarily say, hey, I don't necessarily know how I can make on this. I got to see if it's going to get above that 605 or 606. So that's where you determine, are you going to keep your stop down here? Or do you say, hey, I'm going to use a candlestick close below the 9 on the 5 minute and adjust it, right? Make it tighter, right? So that's where you can say, I'm going to move it up a little bit. This is a little bit iffier, so I'll put a stop over in here. So glue, I like the pattern. It's still in play. It's an ascending triangle. It has a lot more volume. CDMO, we can see, okay, we have the potential to make 20 cents, so it's more clearly defined of what we can make, but the problem is it's not getting as much volume, right? So these are the things you look at. Again, I'm going to show you a bunch of other ones when I come back. So these are kind of the slow grinders, how they move. When I come back, we're going to look at some of the high of day movers and what they're doing, and we're going to see the patterns on those and take a look at those when I come back. So give me a couple minutes. I'm going to take my few minute water cooler break, and I will be back. All right, so somebody's saying, or Dan is saying, not sure why we can't see the scanner. It's like join.me is not refreshing. Awesome. Let's take a look. Oh, not sure. Dan, you're not seeing join.me? Good news, guys, is I've been having some technology issues. We ordered, it should be coming today. It came yesterday. I have a new computer that was coming, but I wasn't home yesterday, so I couldn't sign for it. So the new one's coming, hopefully today or tomorrow. And Dan, my IT guy, will get it all set up, so we should not have any more technological issues. So, all right, guys, so look at what's going on here. And now here we go. Now I come back, and now it's going. It's showing the same screen that you opened with. I don't know what that means, Dan. Dan, what do you mean it's showing the same screen that you opened with? All right, so I'll let Dan respond. So guys, as you can see, these ascending triangles, they just take time, right? They bounce around, bounce around. Now look, CDMO when I had left was 30-something thousand or close to 40,000. Now it's gaining some volume. Now it's gaining. Here we go. Now wait, watch, and see. So at this point, what I would do is I would maybe adjust. Maybe try restarting join.me. Okay. Guys, give me a second. Every time I'm trying to teach you guys something, I get some stupid technological issue. All right. All right, so for you guys that are watching Trade Ideas and you're annoyed by it not working right now on my screen, I'm going to shut down Trade Ideas and I'm going to restart it, and I'm going to put a new link up. Give me a second. I will tell you when it goes up. Okay, that's that. And we will go to Trade Ideas. And I will update the link in a second. It's updating. And it should be updated now, guys. So go try Trade Ideas link now and see if it is updated. Let me know if it works. So how do you enter the Trade Ideas room? Someone's asking. Here you go. The link is whoever, if you're listening right now, Power by Man, go right up, log into your account, go to members only section, Trade Ideas link right here, and you will see it posted. All right, so let's get back into things. So today you're seeing the beauty of ascending triangles. Ascending triangles you can see on so many different time frames, right? They obviously move quicker on a 1 minute time frame than they do on a 5 many a times. So here's what I'm going to show you guys. So technically I was gone. Now you're look at these two ascending triangles. They're just kind of like, they're just grinding, right? So this is where if you're like a quick scalper, right? If you want to get in and out of a trade really quickly, Ascending triangles on a 5-minute might not be your style. On a 1-minute, probably be a little bit better because it's either going to break out or break down. On these 5-minute ones, they just kind of slowly grind. But if you want kind of a slower trade, you're at work, you want some time and stuff, these ascending triangles give you time. So as you can see, remember this line I drew back over here, 594, and this one at 373. You technically could still be in these trades right now. So at this point, what I would do is I would just kind of, now that my chart's getting a little messy, I'd like to kind of change it up, and now I'd go back to kind of right over in here, that 380-ish area. And then I would kind of just draw it like, let me go to a 1-minute. Kind of like this. There you go. So it's a little bit cleaner looking, right? So if you wanted to be in a trade like this, you can see, there you go. This is what the ascending triangle is looking like. At this point, it's grinding, right? It's just kind of poked out above here. It's slowly grinding, not doing much. Again, you could still technically be in this one, but you might say, hey, this is too slow for me. I just want to get out, and I don't want to trade it. This one over here on glue, and you can see $4 is going to be resistance, right? So again, you can say, why is that one slowly grinding? Why is CDMO taking forever and not getting volume? Again, look at the shares over here. Shares are like shares outstanding, kind of like float, a little bit differently, but you can see it's a higher float one. It's not under 20 million, so it's going to be a slower grinder. Glue is another one. You can see 139 million shares outstanding, another real slow grinder. So the reason why these are not, typically just taking off and flying is they're lower float or they're higher float stocks. So then you got to say, hey, I like the ones that go really quickly. So then that's where you would look at lower float, right? So you can see here, by the way, I'm just creating a new top, and now going over here, redoing my trend lines, and you kind of see, okay, it's a little bit clearer looking. Slower grinding. This is what the higher float stocks look like, and they're slower grinders. But at least you can, again, you need to be able to see these patterns. If you're new, it doesn't matter if you're trading Apple or you're trading Dry as I'd say a garbage pump and dump stock, right? Dries or tops or Apple, same thing. You're looking for patterns, right? You can look at these patterns on, daily, monthly, weekly, and then also intraday charts. So again, I'm showing you on the 5-minute charts, 1-minute charts. These tend to either pump or break out or break down quicker. So these are ones we're looking at. They're just kind of grinding today, not doing much. So now let's go look at some other stuff, right? So ENPH, this is one everybody was talking about last night. I'm going to now zoom in, and I'm going to go back to my regular chart, right? So EMPH was one people were talking about right here. So we were talking earlier, big cup. Now you have this handle right over here. Let's remove some of these lines. All right. And we'll redraw them. So there was the cup. Here is the handle. It broke out. Now you can see a high of pre-market high, 645, right up over in here. So that's right where pre-market high is. And what has it done all morning? It's traded sideways. So a bit anticlimactic. So on a 5-minute pattern's garbage. On a 1-minute, let's see. Possible the yo-yo. You could have possibly gotten this yo-yo up and then get trapped, right? It's just, 5-minute pattern is, again, it's, kind of a garbage. But here's what you look at. And now you got to say, okay, I can see this wedge. But now here's what I can do. Before I call it garbage, let's now go and let's find these patterns. So let's connect this peak down over in here. And now let's do this. Maybe right over in here. And now you might have, now what do you see? You see more of a symmetrical triangle. So you can see a symmetrical triangle within, You know, so a falling wedge breaks out, symmetrical triangle. So at this point, now you kind of want to see it get above that. Right around that 625-ish area. See if it can break out about, get out of this triangle, break out above 625, and then you got 645 resistance. These symmetrical triangles get messy, right? They go up and down, up and down, up and down. Kind of like the ascending triangles, but at least with the ascending triangle, you have a clearly defined top. These symmetrical triangles, you do have a, you can see if it breaks out, you obviously want to see it, if you're bullish, break out of the triangle. If you're bearish, you want to see it break down. But you can see they get a little bit kind of messier to trade. So at this point on the 5-minute, I'm not really a big fan on the 5-minute for EMPH, but you can see these patterns. You want to see it go and break out if you're bullish on it. NIHD, we're going back over to this one, and you can see this one now. So my lines are all just messy right here. So I kind of just clear them out, right? I can see high of day, 396, and then I can say, well, what's going on over here? Well, you can see some resistance right around that, what's that, 324. You can see some right up there on that 334. So you can see a big cup and handle, as well as another big cup over in here. And then you see over here, draw these lines again. What do you guys see again? Another triangle pattern. So right here, you want to see if you're bullish on it, see it get above that like 320-ish marker, but then you have this resistance up in here. So I'm not a huge fan of symmetrical triangles. And then you have to be aware of the resistance levels right here. I personally like bull flags and ascending triangles. Doesn't mean you can't trade these. It's just not my niche, not my style. But this is what you got to look for, right? Draw your lines, find the patterns, and then you know, look at resistance levels and support levels. VTGN. So VTGN, we were looking at that earlier at the open. What did it do? It kind of had that falling wedge, just fell all the way down. And now right here, let's just remove the drawings. So as you guys can tell here, as the market starts to open, now we're an hour, you know, you're hour into the market. Now the patterns start kind of showing themselves. So you can look for more of the bigger patterns and more of also potential reversal patterns. So right here, I'm not a huge fan of this. It's just kind of messy on VTGN. Not really liking it. Let's go look at CANF. CNF, another one we were looking at open. What did it do? It just failed. And now you have kind of like that bear flag-ish pattern right now. You can see, yeah, kind of just bear flagged to the 9 EMA. So again, this is where you guys got to look and see, okay, at pre-market, I thought this one's supposed to fly. It was on trade ideas. Everybody was watching it, right? What did it do? It pumped up at the open. It dumped. Happens all the time. VTGN, look what happened. At pre-market, it was up at 172. At market open, I thought this thing's supposed to fly. What did it do? It dumped. So again, these ones with trade ideas, you can make a ton of money. We love it. They're the best scanner that's out there. But if you're new, you have to be able to know patterns. And you're going to only be able to trade these. These things pump and dump very quickly within a few minutes. You know, they either pump up or they dump within the first 10, 15 minutes of market open. So if you like this trading style, you're going to have to move it down to 1 minute and be quick with them. But, you know, you got to be careful with these high wave candles that tend to form. Let's take a look at CANF again. So look at this. Two of the big ones we were looking at market open, if you're looking at patterns, VTGN had a big high wave candle, right? Tug of war, massive battle between the bulls and the bears. Everybody's trying to get a quick scalp. If you're a pattern trader, you're not going to be able to trade that. CANF, what happens at open? Ding, ding, ding. Battle of the bulls and the bears. You have to scalp really quickly on a 1 minute. If you're new, you're never going to be able to trade that. If you're a pattern trader, you're not going to be able to. Right? Battle, battle, battle. Let the battle fight out if you're new, and then come back when the patterns start to form. CDMO, again, we're looking at this. It's still, look at it. It's just slowly grinding. You know, so this might be one of those ones that you might, you know, You might sit back for an hour and trade a pattern on this thing, and you might make 10 cents, right? So if you're like, I don't want to make 10 cents, that's terrible. Like I want to make, I want to get in and out. I want to make a bunch of trades. Then, hey, these slower movers patterns might not be for you. But if you're like, hey, 10 cents, I could buy 1,000 shares, make $100, or buy 2,000 shares, maybe make 200. Okay, I'm happy with that. And it gives you some chance to look, determine your risk management. On the patterns, you're going to be able to determine your risk management a little bit better. On the quick movers like this, VTGN, if you go to a 1 minute chart of this one, you would have had to, again, you wouldn't have been able to. So a 1 minute quick trader, right? You wouldn't have been able to trade this one. You would have taken a bath on it. CANF on the 1 minute. Let's look at that. At the open, it's just a complete mess, right? It's a mess. Let's take a look at some other ones. So CDMO, not doing much of anything, just kind of slowly grinding. Glue, what is this one doing? Just slowly kind of grinding, not doing much of anything. And you can say, you know what? This is kind of a crappy day so far today. This is not fun, right? Bullish Bears watch list really stinks today. They're not doing very good. They didn't call out good trades, and they don't know what they're doing, right? And then you could say, well, wait a second. I just showed you guys our watch list, and then I showed you two of the top ones we were looking at trade ideas at the market, and the trade ideas ones didn't do anything, and my watch list ones are not doing anything. So then you can say, these guys are terrible. They don't know what they're doing. Or you can say, well, wait a second. Let's take a look. Why is that happening? Wow, good question. Let's go to the futures and see what's happening on the futures. The futures is right towards the top of a rising wedge, right smack in between resistance, forming a kind of a doji spinning topish candle, right? So a candle like that causes major indecision. When you have major indecision, it reflects on stocks. The majority of stocks run with that, right? They run with support and resistance. So if the market's up, a lot of these stocks will go up. If it's down, a lot of them will go down. And then when it gets in indecision mode, that's when you get this, right? So hence, the patterns are not looking so hot right now. So let's go to some of the other ones that might be some of the higher moving ones on the day and see if any of those might be good to look at right now. And we'll look at SEII. Lucian, does the angle of the trend line tell us anything? On what? On what stock? Trend lines always tell you something. All right. On a rising wedge, if you're referring to the futures right here, you can see price is in the middle of these trend lines and it's starting to squeeze. Either it's going to break out or break down. On these rising wedges, you have to be careful because many of times, typically, they're going to start to break down. So don't be surprised if the market starts to fall out of this and pulls back, right? It's at resistance, moving up, starting to get squeezed. I wouldn't be surprised if there's a reversal, but it could break out as well. That's why you have your trend lines here. So trend lines absolutely tell a story. You can see price is riding the trend line here, right up in here, and it's starting to squeeze. Well, that's a weird name. Choof. So let's look at Choof. So price broke out today right above 86 cents. It broke out, and so it kind of moved up, came back down. At this point, it's a bit overextended. Next up, you just got to assume $1 is going to be major resistance, those whole and half dollars. So at this point, you got to see if it can go and break above $1. I'd be careful, right? So if you're new, you can look at a 5-minute candle here, very overextended, right below $1 psychological resistance. This one, I would wait for this to pull back if you were to ever take a trade on this. So it kind of formed a cup, and then a handle kind of broke out right over here, moved up about 5 cents. Not really digging it at this point. SEII. So this one Okay, perfect example. Here's another one for you guys, right? So SEII, we're going to remove the drawings. Obviously, it's a pump and dump, right? Many of these small caps are. So right here, what you would have done, let's say you saw this and you were looking at it, trade ideas in the morning. Here's the pre-market high, right? So on a 5-minute chart right here, if you're looking at the pattern's garbage. You're just not going to trade this at all. It's a garbage pattern, right? It's just so like, but here you go. Here's what exactly what I want to show you guys overall. This at the open, just like I showed you guys, we're going to go back over to VTGN. Look at VG. I'm going to show you guys right here. I'm going to draw circles. This, you see that? That's VTGN. Can this, and now SEII, this. What are you guys seeing with those three candles? Massive tug of war between the bulls and the bears at the opening bell. And what happened was the bulls wanted to push price above pre-market high. The bears came back down, and you got a mess, a battle right here. So now, a couple of things to look at, right? If you're trying to trade the best setups, this is a terrible setup. This setup on this 5-minute chart is garbage. Now, can you make money trading this? Absolutely. Now you got to start saying, let's drill down to a 1-minute chart and see what was going on. Well, if you try to take this trade, this is why we tell people, be very careful, right? You can see, hey, a break of a pre-market high. So again, going back to that strategy of when you're looking for a stock to break a pre-market high, should you get in on it? Well, this is where you have to be lightning fast. You can see pre-market high was 432. Within the first minute, it got up to 450. So in less than a minute, you could have made 20 cents. But again, traditionally, you would say, hey, I'll get in if it breaks pre-market high, and I'll use a close below that as my stop. So what does it do? 430 to 450. You pretty much literally the second you get in, you're going to be trying to get out the moment you get in, banging your hotkeys to get out. But look what happened. If you didn't get that 20-cent move, what did it do? It went from 430 all the way down to 45. You would have lost, what is that, like 45 cents? So you're risking 45 cents to make 20. Terrible risk management. Now, again, if you want to trade these low floaters, make sure you're watching Dan's strategy of this, riding the 9, looking for the patterns to form. At this point, this was a little bit too choppy on the 1 minute. Very, very difficult to trade. Maybe you would have looked at it right over in here. It's still, though, 430 down to 418. Still a bit risky, and it's got a lot to contend with over here. I don't like this, right? That's not how Dan would teach either. I don't know if he would have risked over here, but this is it's just risky. So if you're trying to get into the break of a pre-market high and profit, you're burned. Done. See you later. Blow up. I mean, you're starting your day off in the first 2 minutes. Terrible. You're just getting screwed. Over here on, let's go back to CANF. Let's look at the 1 minute there. So 1 minute, it did not even touch pre-market high. Shorts came in, pushed it down. I mean, look it. No, you're not trading this. And if you did, it was a terrible trade. And VTGN, 1 minute, did not go and break pre-market high, and this one just took a dump. Now it bear flagged down. So there you go. VTGN, CANF, SEII. And let's go back to ENPH because that was the one that everybody was supposed to watch today, right? 645 pre-market high. It didn't go up. So it didn't go and break pre-market high or touch it. You can see it kind of sold off. Then maybe as it started to form this U and you had a 9 and 20 crossover, maybe right in here you would have said, okay, maybe I'll get in at the break of this candle at 604 in anticipation of this break of 610. So 604 up to right around here. you know, if you didn't take profit here, you would have probably said, okay, I'm getting out because it's failing. So 604 to 616, 12 cents, right? Maybe, 12 cents, had to be quick, and then it kind of dumped down. So you had maybe a chance here, and you could have risked it to make 12 cents there. That, again, many people like that style, right? That's not, for me, that's not my style. Dan, David, those guys, they may like to say, okay, I'm looking for this 920 crossover. I can see a candle close. What is this one? 604 down to 596. So this is where you can see 920 crossover, candle close above the moving average lines. Looking for a break above high of day, right around that 610-ish marker. Looking at resistance above, right around that 622. So, okay, I might risk to get in a break right on this candle using a close below it. So 604 or 5 down to 595, that's 10 cents. So you can say, okay, this might be a trade to make, right? So you might be willing to risk this, but then you got to say, okay, I'm risking 10 cents on this candle. What do I have the ability to make? Well, if it breaks pre-market high, what is this, 605 area up to 622. So that's 17 cents. So I'm risking 10 cents on this candle for the ability to make 17 cents. So the pattern might be one that you're willing to risk on, but look, you're seeing, well, you actually wouldn't have seen this peak. You would have maybe seen it right over here. You could have drawn this one over here. So it kind of extended across. So you wouldn't have seen this peak until it happened. So you would have looked at probably this line right up here, that red line. So you would have been willing to risk, let's see, 605 up to 625. So now you might say, okay, I have the potential, because you didn't know this rejection was coming. 605 to 625, that's 20 cents, and you're risking 10 cents. So that one might be one you might potentially make. That's a 2-to-1 profit loss ratio. So you might potentially take that trade, right? So you want at least a 2-to-1 profit loss. So that's one where you may have been able to take that trade there, and you would have gotten out at rejected below 625. You would have probably taken your profits here if you saw this pulling, this red candle. So you would have made on that about 10, 12 cents. Guys, you seeing that so far? It's pretty much garbage today on both my watch list and on trade ideas so far. Not looking so hot. Glue, yeah, so perfect, yeah. So Tillman just said glue has movement. Charlie says, I'm doing great at blowing up my demo account, LOL. Well, it's better to blow up your demo account than your real account, but here's where I go back. That's actually a great point. Guys, we want to stress to you guys, if you've been following us, if you're trading in a virtual account, we hear some people say, hey, I have 100,000 in my virtual account, and I just made it into 200,000. And no offense to you if this offends you, but who cares? Because you're never going to do that in real life. You're never going to take your $100,000 and start gambling it and turn it to 200,000. You're going to you're going to blow up your account, right? That's I got to be nice. I got to watch how I say things here. That is not a wise move. We always stress to treat your virtual account exactly the way you would a real account. Use the exact amount of shares that you would in a real account. Use the exact stop losses that you would in a real account. And treat that virtual account exactly like you would a real account. Super important. So, oh yeah, by the way, going back to glue. So here you go, guys. This is what I like to show you guys. These patterns, right? So look at what happened with glue today. So going back, here you go. This thing is just grinded. So it's almost 11 o'clock. And you can see so far nothing has been really, it's been just garbage today, right? A lot of garbage. You could have made 12 cents on EMPH on that quick move. Real quick move on that 1 minute. We're going to come back to glue right here. Show you guys, right? We go back over here on glue. If you're a 1 minute trader, you're like a David or a Dan, you could have gotten in right over here, maybe right above this candle, risking 10 cents to make potentially 20. and then kind of saying, you can say, hey, you didn't take your profits. You saw this red candle. I'm getting out right over here. So you would have made 10, 12 cents, right? So there's that. You could have made your 12 cents that way on a 1 minute chart using a break of a high a day, closing above the moving average lines. So there you go. You could have made your 12 cents. And many people love to trade that way. You could have been done by 9:48 or actually 9:49. So in 20 minutes, you could have made your 12 cents and gotten out. After that, it's just too messy, right? Not much over here. Now you come over to glue. And if you're more of my style trader, right, you're going to say, okay, I like the 5 minute patterns. I like to kind of like just let them form. You're going to see over here, this has just been a yo-yo. It's just, you saw this, right? I had this set up for you guys. Look at this. It's just seesaw yo-yo, right? Not much of anything. But as you can see, remember we said in the beginning, there was we're using kind of around this area. It was like right around here as a stop, right? Just above this area, kind of like right in this area over here. So you can see this thing just yo-yoed and seesawed for just grinding, right? Just garbage, like not garbage, but just doing nothing, right? Back and forth. It broke above here. Look what it did. It broke above the neckline. What did it do? It retests, and the retest failed. So if you got in ahead of time, you may have gotten shook out on this is a 1 minute candle, right? So you can see this 1 minute came back, failed. You had another 1 minute hold here, and then you could have said, okay, I'll get in an entry on a 1 minute on the break right over in here. You saw this hammer and then taking it if you were trading the 1 minute, right? But, you know, this is one right here. Now it's stair stepping up. Let's go over here. So now this is the 1 minute chart, and now you're looking, okay, this thing might be doing an ascending triangle. Now I can draw my trend line. Let's go back over here. So now I can kind of see, maybe right in here. Kind of right here. You guys see this? Ascending triangle. Now it broke out again. Ascending triangle back over here. Broke out. Kind of came back to the moving average line right over here. Moved up. Ascending triangle. Moving up again. So now this, let's go to a 5 minute right here. Again, there you go. It's moving. Look at this. Man, textbook, right? So this is where you determine what type of trader you are. Let's go back to, at this point, glue, it's got room to run, right? This thing's got room to run going up to the weekly. I mean, it's got room, you know, probably 650 I would look right up here, and then kind of probably around $7. So I'd see it has room to run up to 650. We don't know if it's going to run up to 650. That's why you got to look at the patterns. So you can see this on this 5 minute pattern. I'm just going to remove this trend line right here. This thing grinded all the way, like right over to 10:35, an hour and 5 minutes after market open right here. Took over an hour and 5 minutes to break out. It just grinded all through here. And now look, now it's up over 2 million in volume. And guess what? I'll guarantee you. So here's what we've been trying to teach you guys. The mob and the herd mentality. When you're new and you're a new trader, you're not going to be able to trade with the mob and the herd until you know patterns, right? Because it doesn't matter if you trade a pump and dump or a slower grinder stock, you need to know patterns. You're just going to probably need to know more on the 1 minute charts than, let's say, the 5 minute charts, right? But the herd in the morning is turning on trade ideas, and you know, they're following, you know, most of the trade idea, most of the other traders on the planet, and everybody's looking at these same stocks. Look, right? SEII 4.5 million, VTGN. You know, so actually this is interesting, right? Everybody is looking at VTGN, but actually glue on my watch list that nobody was watching on the herd wasn't watching glue at open. They were watching VTGN and CANF. Now, glue, which nobody was watching at open because it was doing this, nobody was paying attention to. So here is where I'm trying to show you guys a strategy. Have a combination of both. Be aware of the herd, be aware of what we're showing you guys as well, and look for the patterns on both and see which one has the best pattern. So think about this. This thing, nobody was really paying attention to this from last night unless you were building your watch list at night because you're distracted by trade ideas and what's popping up and where the herd is, right? The herd went and just battled each other out. The herd did this. VTGN, the herd at open beat each other up. Big battle of the Bulls and the Bears. Bam, bam. And Bears won. CANF, big herd battle. Bam, bam. Bulls and the Bears fought it out. Bears won. SEII. Now look at this one. You know, battled it out, and now the Bulls may be trying to gain control. But this is an epic. This is a battle, man. Epic battle, getting just whacked around. If you're a pattern trader, this is a bit messy on a 5-minute. You're going to have to scalp on these 1 minutes, right? So this is where the herd's been kind of following right over here. EMPH, right? You know, the herd is just, you know, if you're trading this, you're just duking it out through here, and it's a bit of a challenge. Now, meanwhile, glue, the herd wasn't over there. They weren't looking. Patterns formed, right? So now here's where you got to think about psychology, right? Think about what's happening. So we saw that we could have made 12 cents on that ENPH on that trade on a 1 minute, right? We saw on my watch list, it would have taken me, you know, a while. You would have been grinding this, right? You've been sitting at work, sitting kind of at your computer, sweating it out, saying, man, I got in this ascending, it's just an ascending triangle right here. This is supposed to break out, right? How come it's not breaking out? And then you're seesawing around and then get trapped in here. And technically you could still be in the trade. And meanwhile, you're grinding this thing out for a half hour, 45 minutes or so, and it's not doing what you like. But what did I tell you guys? Trade in probabilities and have proper risk management if the trade goes against you. And we could see we had, I think it was right around the middle of this triangle, around that 597-ish area as your stop, a candle close. You can see this one dropped down, but did it close below the 9 on the 5? No, it bounced back up. So it would have faked you out. You could have stayed in it, and now look right here, breaks above 602. And now it's gotten up to 614. So all of this we're talking about, right? You're still looking at right now. Look. What do you see here? 601 or 602 up to 614. 12-cent move. So being a pattern trader, you're making 12 cents per se on a slower grind up. So if you like this style, you find these patterns. Look right here. Price is overextended on the 5-minute. This may be trying to reverse. You can see a kind of a shooting starish. It's overextended. This may want to pull back. It could go up, but you know, be aware this is a potential warning sign as a reversal. You may want to look at profits. Again, it may go up and you might take profit too early. Happens all the time. But you could have made 12 cents this way trading patterns, or you could have made 12 cents on EMPH going really quickly on a 1-minute chart using kind of Dan's strategy. Again, this is where you're using you know, good risk management where you're not just getting in. I'll show you guys in a second. Again, you're taking and saying, okay, I see a 9 and 20 crossover. Price is getting over VWAP. I'm anticipating a break of high of day. I can see resistance up here about 20 cents away. I'm willing to risk on a 10-cent candle if it goes against me. And I can see where this candlestick started to close. I'm going to take my profits. So then you would have said, okay, I made my 12 cents this way, right? So you can trade these 1 minutes properly. So this is kind of like, you know, again, right now, Dan also teaches, you know, when you get a candlestick close below the 9, you get out. So if you didn't take your profits up here, you would have then gotten basically stopped out right over here and you would have lost. You know, so if you didn't take your profits, didn't see these warning signs, and just strictly, this is where, again, the strategy is not foolproof. Just because you get an entry in on a stock, you might wait for yourself to get a candle close below the 9, not take your profits, and you can stop out and you can lose money. But look, if you see here, if you got in on this candle at 605, you could have stopped out over here on 603. You would have taken a 2-cent loss. But you have to be quick, right? 1, 2, 3, 4 minutes. This is coming down, right? So if you didn't take your head, you're having short reactionary time to decide, are you going to take your profits or are you going to stop out? But again, you had the potential to make 12 cents profit here. Or you could have gone over on glue. And, you know, technically this thing on a 1 minute, it's still holding. Right? So right now, you know, using Dan's strategy, this 1 minute candle would concern you. It hasn't closed below the 9, but now it's teetering. And you can say, okay, you can see these indecision. This might worry you a little bit. That's where you have to decide, do you take your profits, look for re-entry? Because this thing could easily go and just dump, right? You don't know. But that's where you have to decide, again, along the way, take your profits. But this, again, is it going to bull flag and go up, or is it going to fail? It could easily fall and go back, or it could break above 614. That's where you have to determine, are you going to take your profit? So all of this said, guys, today is a grind. It's an absolute grind on all of these stocks, both on our watch list and on trade ideas, because like I showed you guys earlier, the market is in indecision mode. Let's take a look at a couple more and then we'll be done. Again, so now as the market plays itself out, you can now go and say, okay, let's draw my lines. What do you guys see here? I'm connecting these peaks. And now I'm going to connect some of these values. Not perfect, but what do you see here? An ascending triangle. Or I'm sorry, a symmetrical triangle. NIHD broke symmetrical triangle. That's what Sore Finger said. Let's go take a look at NIHD. So now you can see kind of, now I gotta readjust, right? Readjust my lines. I can see 326 is the high a day. Readjust, and I can say, okay, maybe trying to break out, right? So you can see 326 is resistance. You know, if you looked at this as a potential trade, you can say, okay, let's look, you know, partially down in this triangle. Maybe you lose like, you know, this area right in kind of in the middle of this triangle down here as your stop. You know, you have resistance at 326. So this is where you got to determine, guys, just because the price gets out of the symmetrical triangle does not mean it's going to break high a day. So now if it gets above this, you know, 316-ish area, you have the room to make potentially 10 cents or more, but it has to get above 326. And if you use 307 as a stop, this is where it gets a little bit hairy, right? You're risking 10 cents for the ability to potentially make 10 cents because you don't know if it's going to break 326. So now you got to say that's it's not great. You're a 1-to-1 risk-reward ratio. Because again, you don't know if it's going to break above 326 or if it's going to crash. So what are you willing to risk? Well, 307 up to 317, that's 10 cents for the potential to make 10 cents, maybe more, 1-to-1. I don't like those odds, right? Because again, we don't know in these symmetrical triangles if it's going to break out or break down. Then you also got to realize the market's trading sideways as well. So it's not trading, you know, bullish on the day to go in your favor. So again, it can go either way. Lucian, glue in 602 out at 611. I was wondering if the trend line angle of 25 degrees versus 40 was important of the trend line. Let me take a look at glue. Again. I mean, again, so that here's what I would do is I would remove these drawings again because sometimes, again, my brain starts getting fried seeing these. I could see a 5-minute. I would draw my trend line like this, kind of right down over in here, right? So kind of connect it here. I can see my high of day right at 614. Now I see a 5-minute. I got to look and see it's a bit overextended. I could also do this as well. Angular resistance right up here. right here. So actually, so now you got to look, right? I got my channel. I got my resistance. I see it's overextended. May bull flag and go up. You know, it's risky, right? This could easily fall or it could easily break out. You want to buy at support areas down here, right? When you start taking trades out here when it's overextended, it's very risky. Buy at support, sell at resistance. Can a stock break out of resistance when it's overextended? Sure, it happens all the time. But you're taking more risk buying out here than you are down in here, right? Buy at support, sell at resistance. Don't buy at resistance. Again, the trade many times will go against you. So Sore Finger says, Lucian, so when you have indecision in the market, don't trade the weaker patterns, question mark. I mean, I won't say don't, but be more cautious, right? You're always having to determine risk reward on every single trade. If you're not determining your risk and not setting up proper parameters and having 2-to-1 risk reward ratio, being aware of the markets, trading patterns, then you're gambling, right? Trading is gambling if you're not determining your risk, looking at patterns, determining support resistance, putting all of those factors together, and then accepting what happens during that trade. If you're going to get, you know, again, remember guys, there's so many people that think that the market's against them, right? They think the market is against them. Read the book, Trading in the Zone. The market is not against you, right? The market is just a battle of the bulls and the bears, right? This is not, you know, stock market saying, hey, let's go out and get David or Dan or Sore Fingers today. This is this is the battle of all the professionals and the retail traders and stuff battling it out, forming patterns. And in the end, you know, again, right now, those of you guys that are listening to us that are in our trade room, remember, we're competing against each other. I might sell you a stock and you might lose. You might sell me a stock and I might lose on that trade. Somebody's going to lose on that trade and somebody's going to win. The battle of the bulls and the bears. The market doesn't care who wins or loses, right? It's just, this is not the market out to say, hey, let's go and get Dan today. This is, you know, the battle of, again, the bulls and the bears. All right, guys. So as you can see, a weekday, it's rough. It's a grind, right? Happens all of the time. So on days like today, it's a big battle and nobody's really winning great. But what goes up will come down and what goes down will eventually come up. So if you're a bull and you're having a rough few days at times and the market goes down, at some point, you know, you'll get a day or two where you can go bullish. If you're a bear and the market's going up, at some point it's going to find a top and start reverse, and you'll be able to have a couple days or maybe longer to short it back down. All right. And on the days where you can't find the patterns and it gets messy, there's a very simple answer to that, guys. Don't trade. So, oh man, I want to end this video, but I want to teach you guys or tell you guys this. Think about it, right? If you're wanting to day trade, that PD, someone was mentioning the PDT rule earlier, right? That's the whole thing that most people, when they want to get into trading or day trading, they have no clue about the PDT rule, right? When they get started, they don't know. And, you know, the majority of people don't have $25,000 to put in an account to be over the PDT rule. They usually, you know, the majority of traders have less than that, right? So now if you have less than 25,000, where do you go? You go to a small broker. Why? Because you want to make a bunch of trades and day trades, right? Because you want the ability to make more than 3 in 5 calendar days, right? But here's why I challenge you guys. Before you go switching from smaller broker to broker, broker to broker, if you don't know how to trade in general, if you don't know support, resistance, and patterns, if you're not able to discipline yourself to make 3 really good trades in a week first, then why the heck would you ever go to another broker and get unlimited trades, right? If you can't even make the discipline to make 3. You should discipline yourself to make 3 good trades a week first before you go and get a whole bunch, you know, unlimited trades, right? You have to know what you're doing first before you do that. That's why, again, practice in a virtual account. then I'd challenge people, hey, before you go switching to a smaller broker, try making three good trades with smaller positions in your TD account or Interactive Brokers account, right? Make good trades there. Get comfortable. Do it for a month or so, a month or two. Discipline yourself to find the best setups. Trade well that way, and then switch to a smaller broker when you're ready. We see too many people in this industry. Yep, I will see Fenny. I get so distracted all the time. We see so many people that get caught up in the whole herd mentality of, oh my God, I got to go get unlimited trades because I got to get around the PDT rule, when literally you could make 3 good trades a week and grow your account, right? You can, forget taking $5,000 and turning it into $100,000 or $300,000. Think more realistic. Learn how to take $5,000 and turn it into $25,000. It might take you a year. How do you get $5,000 and get over the PDT rule? Forget $100,000, forget $200,000 or $300,000. Who cares? You're never going to get over $100,000 or $200,000 in your account unless you can make at least 3 trades successfully first. Then you can make 4 and 5. Then you can make 10, right? So C. Fenny says, Lucian, can you quick show the difference between low float and high float? Sure. So Thinkorswim, they don't have a float tab. They have a shares tab. I use it because typically their shares tab is basically shares outstanding, which is basically a higher amount than low float. So I look at this and I say, whatever I see this number over here with Thinkorswim, it's typically going to be higher than float. So meaning like if SEE says 4884, for shares outstanding, typically the float's probably going to be less. Let's see if I'm proven wrong. Let's go over to Yahoo Finance, finance.yahoo.com. Let's go to SEII. And where is it over here? Is it financials? No. Profile. Which one's the float tab? I hardly ever go over here because I just use the shares outstanding. Here we go. Okay, so here we go. On Yahoo Finance right here, you'll see SEII. Click on statistics. Float 4.3 million. Go back over to TD. What does it say? 4.8 million. We'll do a couple more and see if I'm proved wrong. So again, the shares outstanding is higher than a float, but this is still a low float. I mean, it's under 10 million, right? So there we go. I can gauge right away. Let's take a look at CANF 19,981. Let's go over to Yahoo Finance, CANF 19,981, and look, it's 16 million float. So 16 million is less than 19 million. So that's why with me, on my TD, I just have shares because I know that I can just gauge, right? If I'm looking for low float, anything under 10 million shares outstanding is low float. Like that's really low float. Under 20 million is also low float. And then above it, it starts to be slower grind, right? So glue, really higher float, right? 139 million shares outstanding. Let's take a look at glue, GLUU. 109 million. So it's still, 109 million float compared to the 139 over here. Again, this is just higher, but if you're looking for low float and you're using TD, I'd use the guide, under 20 million. So right here, BLNK, if you pull up BLNK, it says 21 million. I bet you it's lower than 20 over here. BLNK. Yeah, see, that gets a little bit crazier, right? Shares outstanding. So this has a 3.66 million float. And Thinkorswim showing 21 million. So that's kind of the guide I use. So basically it's kind of like this. It's not a rule because sometimes these higher float ones will just break out, right? So some of them will pump up really quick. But typically under 10 million is the guide, really quick. Under 20 million, still really quick. When you start to get around 50 million or so, or right around the 50 to 100 million, kind of a medium range. Over 100 million, kind of a slower grind. See, as you can see here on GLUU, over 100 million, this thing's just been grinding, slowly grinding. So this looks great, right? So this looks like, oh man, great patterns, moving up, looking great. But still, if you look at it, it's, if you got in at the break of this ascending triangle, 612 to 615, you're waiting almost 2 hours to make 13 cents. But, that's what you got to determine. Are you a trader that likes to just kind of slowly grind out, make your 10 cents? Again, trades can go against you all of the time. However, you're going to find on our watch list more of these ones that people are not watching because they're looking, the herd, the mob is looking over at trade ideas and those quick pump and dumps in the morning. Whereas with ours, they kind of just slowly grind up. So lower risk, lower reward. So the ones on my watch list, if they're not hitting trade ideas in the morning, typically they're not going to pump and dump. They're going to probably, if it goes against you, you're going to take smaller stops. Again, in general, sometimes they're going to dump. But overall, if you take trade ideas, pre-market movers, and my watch list the night before, you're going to have the ability to make more money on a trade ideas pre-market mover, but you are also going to have the ability to lose a lot more money because they pump and then they dump, right? With my watch list, you're going to have less, you're going to have the ability to make less money in the morning or just in general, but you're also going to have the ability to protect yourself and get smaller losses. So now you can say, well, what's the right way to trade? That's where you're going to have to determine. Some people, like your David and Dan's, they love those quick, trade ideas, in and out movers. They want to be done in 10, 15 minutes, maybe be done for the day, right? And there's other people that are just like, hey, I like the slower grind. I personally, I love, this is what I love. I love the patterns, and I love like, hey, I can define my risk. If I'm looking to make 10 cents on a trade and I can risk 2 or 3 cents, I like that, right? So I'm not a hotkey warrior. I'm not a hotkey ninja, like David. I'm not an in and out in 10 or 15 seconds kind of guy. That's not my style, but there's tons of people that are. David likes it. Dan likes it. But again, Dan's strategy, remember guys, Dan did a really good video here for you guys under members only right over in here that shows you guys the momentum strategies for beginners, right? This is showing you how to trade the 1 minute and those quick movers, right? Dan is not teaching you guys to get in the second a stock breaks above pre-market highs and sell within 10 or 15 seconds. Dan is showing you guys, look for the patterns, go to a 1 minute chart, find when a stock pulls back to, let's see if I can see an example on this one. When it's not the greatest. I showed you guys one earlier. Like on the 1 minute, Dan's not saying, hey, go in out here, right? He's wanting you to get in closer to that 9 EMA. This is not the greatest example, but maybe you would have seen something like this. As an example, Dan may have looked at this and said, okay, I can see a flat top, I can see high of day right over here, right, when the day started. Price goes up. He's not going to tell you to buy down over here. Over in here, it's still looking messy. So as this pattern's starting to form, it's getting choppy and messy. He might look down over here and say, okay, this might be forming more of an ascending triangle. I see price is closing right above the 9 EMA here. So at this point, I might say, hey, I might be willing to get in at the break above this candle here. So what is that, 596 down to 593. It's 6 cents for a break, for anticipation of a break above VWAP, for an anticipation of a break of a high of day. So you might say, I might risk to get in, but look. So here is where you're looking at. You're looking at something it's right near the 9 EMA, a close above, So now you're risking, hey, I'll get in here, and if I get a candlestick close below the 9 EMA, I'll be out. I'll stop out. So here he could have gone in maybe at 596 for an anticipation of a break of $6. And as you can see, it went up, and it's just been a while, right? So it's been choppy, trading sideways. So this is an example of, hey, you know, Dan can say, hey, I got in it. It's not going the way I want it to. I can take my 4 or 5 cents profit, or I can kind of stay in and grind it out. And here you go. Now you get your first candle close below the 9 EMA at $5.99. But look, he got an entry near the 9 EMA, right? Near support. So even if he waited this entire grind out, he still, you know, made 2 or 3 cents, right? So this is where, again, many times trades are going to go against you. But when you buy at support levels, you know, you get better entries. And if the trade goes against you, you're taking smaller stops. So this is, again, showing a 1 minute setup rather than a 5. But you're not going to see Dan teaching, or, again, I use Dan because Dan's a little bit different of a trader than I am, right? He's in a little bit quicker than I am. You're not going to see Dan saying, where is it? Right over here. I'm trying to even think of one that went. Right here. You're not going to see Dan teaching you guys on a 1 minute to trade this. That's complete garbage, right? So even though Dan's a hotkey guy and loves getting in and out really quickly, he's not going to teach you guys to trade this way because this is a garbage chart. You guys see what I'm saying? Can you make money on this? Sure, but like, it's just, why put yourself through the crazy risk of this, right? It's just crazy. So that's what I got for you guys. If you are not a member yet of our community, you can come and join us on Facebook right over here. We are the Bullish Bears. Feel free to come and join us. We have over 30,000 members now and continuously growing. Great place for you guys to learn the stock market. We're always trying to help you guys, as you can see here, just teaching you guys over and over and over again, support and resistance, because that is the entire name of the game when trading. You're welcome, Tillman. And for those of you guys watching on YouTube, feel free to come and join our community. Again, we have our Facebook group. We also have several trade rooms. We have a day trade room, a swing trade room, a futures room. So we give you diverse trading areas for communities to go and talk. Again, we love Facebook. Some people are not fans of social media, so these rooms are great areas to come and learn and talk to people. We also have a hangout room if you want to go and talk to people in there. Our trade alerts, again, they're not traditional trade alerts like you would get. We're not telling you when to buy and when to sell. We're doing our watch list each night, and we're showing you guys key breakout and key breakdown areas to enable you guys to make your own trading decisions. So we send out trade alerts each night with our stock watch list. So we do our watch list and our alerts each night. If you look on our YouTube over here, go over to Bullish Bears right over here. If you click on our YouTube, make sure you subscribe, click the notification bell, and you'll see this, guys, right? We do our watch list several times a week. We make videos. And then the next day you'll see in our trade room basically how we trade our watch list. Some days we might, some days the watch list will be good. Some days the watch list will be bad. Someone said to me last night, they posted a message in the group, why did you not put ENPH on the watch list, right? Well, first of all, Thinkorswim, it was after hours news. A scanner doesn't pick up on it. So, again, you may like our watch list, or you guys might say, hey, I want to trade the quicker movers, the pre-market movers. I don't care about the watch list. Well, hey, great. Look, we have we give our trade ideas link every day. It's a $120 scanner. You can watch our screen, click here, try out trade ideas before you buy it. And you could ignore our watch list and look at trade ideas. Or you can take a combination of both. Have screens up and see what looks good on our watch list and what looks good on trade ideas. And then what you would do is just come in, pick the trade room that you like best, day trading or swing trading. Go and learn, interact with people. And if you're new, take our thousands of dollars worth of courses, get comfortable trading. This will keep you busy for probably the next 6 months while you're learning. And while you're learning, don't be foolish and trade with real money. Think about it, right? Why would you trade with real money if you don't know how to trade? That's silly. You need to practice with fake money first. Open an account with Thinkorswim, Interactive Brokers, or whatever broker you like. Make hundreds of practice trades until you're comfortable trading. And then what you will see, guys, is if you think that trading with real money is the same as trading with virtual money, you are going to be completely wrong. The emotions are completely different. You may see a bull flag very, very clearly in a virtual account, and that same bull flag, when you put real money on the line, you'll be like, how did I miss it? It's because your emotions get in the way and they cloud you. That's why we tell people, when you move off of a virtual account that you've been successful with, that you've been trading exactly the way you would a real account, same exact shares, emotionally invest into your virtual trading account. Treat it exactly like it's real money. Feel the loss, feel the wins, and really learn to just separate your emotions after a while. Like just absorb yourself into that virtual account. And then when you go to real money, scale your way up, right? If you're going to trade 1,000 shares normally, don't go from your virtual account to real money and start trading with 1,000 shares. That'll freak you out. Trade with 100 shares. Do that for a week or two. Scale up to 250 shares. Then go to 500. Go to 750. Then go to 1,000 shares. Makes sense, right, guys? It makes so much sense what I'm telling you guys, but 90% of the people don't do that. Because why? They want to make money. And when they blow up their accounts, they blame it on the markets. They say it's the market's fault. No, it's not. It's your fault, right? It may sound harsh, but it is your fault. Every decision you make, whether you win or you lose, is your fault. You can say, well, my computer it crashed today, or Thinkorswim's platform froze. It's Thinkorswim's fault. No, it's your fault. You didn't accept the risk. You have to accept the risk of every single trade that you make, good or bad, and not blame it on anybody. You have to take the goods, the bads. It's your responsibility for every single trade that you make. If you're not able to accept that risk, you're not going to become a successful trader. And that's that, right? Right over here, guys. Again, we're all teaching you guys every day, a couple hours in the morning, doing our watch list. We have our free courses, thousands of dollars. We have our members only video section, lots of other private content in there. On top of all of our courses, we give you a $120 scanner and trade ideas to try out before you buy it. And as you can see right over here, we are only $10 per month. There you go. You're not going to find a better value in the industry. We're basically not charging you a car payment a month for our services, and we're not charging you a down payment on a car for our courses, right? So save you a car payment a month and everything we're teaching you guys. And if you take advantage of it, it's a great community to really learn how to become a successful trader. And as you can see over here, if you want to purchase trade ideas, we have the link below, or you can click on the banner. Use our discount Bullish Bears 15, get a discount of 15%. Market Club's another tool we like to use. It's about half the price of trade ideas. It's a really good swing trading and option scanner. Again, don't buy any tools unless you can afford them. But like any business, you're going to need tools to become successful. So as you grow and you get the budget, pick up a good scanner, right? And then add other tools down the road as you grow. So that's what I've got for you guys today. And you guys have a wonderful rest of your day. I'll talk to you later.